I do want to broaden out our conversation, though, bring in our next guest into the conversation, talk more macro, specifically focusing on gold to start, as we're seeing more record highs on a near daily basis. I want to bring into the show David Stryzewski, the CEO of Sound Planning Group. David, thank you for being with us. I was just talking about gold prices so far this morning. As you know, we crossed that $400,000 level, seemingly making more and more all-time highs. What do you think the primary driver behind this massive rally in gold is?
Well, we've got a gold rush on our hands right now, no question. Gold breaking 4,000 is a monumental moment. But if you ask what are the drivers behind this, I mean, we got to look at the debt of our nation, $37 trillion and counting. Additionally, when we look at world bankers right now, these central banks, for the first time in 2025, own more gold than they actually do treasuries today. So that's a big flip from where they have traditionally been. But also, for the first time in 50 years, we're seeing the U.S. dollar having the weakest start to the year so far. So I'm looking at this right now as a beginning of something much bigger. But ultimately, my eyes are on silver right now that's going to break 50 today. And that's a significant moment here in this metals market, given the fact that it connects all the chips for NVIDIA, that it connects the electricity in the world for solar panels, for EVs. In fact, if you want to shoot missiles off, you got to have silver. But we've got a deficit of almost 700,000 ounces since 2021. So this is a silver squeeze moment, and I believe that we're at the beginning of something brand new.
All right, so David, let's talk about this silver squeeze, because we don't talk too much about the gold to silver ratio and how out of balance it is right now. Walk me through your thoughts in this opportunity on silver.
Absolutely. So currently this morning, the ratio price of gold to silver is approximately 82 to 1. But if you actually look at what has been mined this year alone, we're looking at 7.5 ounces to 1 ounce of gold. And so there's a significant price opportunity move within silver just based upon supply and demand. And I just mentioned the fact that we have almost 700,000 ounces that have been consumed and not been produced since COVID began. And so this is again the beginning of something very real, but silver is ultimately connecting all the circuits of the world. I mean, you want to go smaller with NVIDIA chips, you got to have silver. Copper's not going to be able to do it. Nothing connects the world better than silver right now. And so if I just held up even a $1 US gold silver eagle, that's worth $1. Yet this morning, the price ratio is $50. And so that just tells you what's happening right now with inflation and the fact that the US dollar has been degraded and degraded and degraded with the printing press.
All right, I want to get to the dollar in just a moment, but I want to continue this metals conversation before we move beyond. Do you think there's opportunity in metal miners as well, or just direct investment in the metals themselves?
Yeah, metal miners right now are looking better than ever. Why? Because when we look at earnings are going up so much more than the price of the metals are. Now, metal miners have been beat up for decades, and ultimately 60-40 portfolios have not been allocating into them, which has been one of the problems that we've had. And so I'm looking at, personally, I've sold a lot of tech here this year and have been allocating into these metal miners because I see that there could be some challenges in tech ahead. I think a lot could go wrong from here at these prices, looking at Schiller PE ratios, et cetera. But when we look at the earnings of companies, the health of these organizations, again, this is a gold rush. You got to have the producers on board here to do it. So I'm a big fan of GDX, GDXJ, just allocate to an index, use someone who's really intelligent to be able to allocate into these things. But, the junior miners are on a roar too. I mean, we're looking at way more than 100% year to date.
And so now I want to move to the dollar, because, we know that everybody knows the saying, when gold wins, when the dollar loses. As far as the dollar, we're favoring metal over paper so heavily. Is the dollar losing some of its status or some of its luster of global reserve currency?
Yeah, absolutely. I mean, it comes down to the treasury market. So we've not had, great treasury sales this year or even last year, for sure in Q4. And so, when we look at the U.S. dollar right now, that's why Bitcoin's at ultimate highs. If we understand what Jerome Powell has been doing with interest rates, I mean, he's not necessarily seeing inflation in the market. But if gold is priced in U.S. dollars, if silver is priced in U.S. dollars, if Bitcoin's priced in U.S. dollars, that shows us inflation is going up. It takes more U.S. dollars to purchase those things. And so the U.S. dollar right now is weakening as a result of monetary policy and other things beginning to gain more strength here in the world.
And as far as your inflation expectations, we're starting to get more commentary from the Fed speakers in the absence of the data. We've really been focused on everything they're saying. And you're getting Logan and Goolsby coming out and saying we need to be really careful here because we don't want to stoke inflation. What's your inflation outlook? Are we on the precipice of seeing it rise, and with tariff impact or other reasons?
Yes and no. I mean, prior to COVID, there was only three places in our economy where inflation was happening: real estate, healthcare, college education. It's systemic today. I got a 25% increase on my property tax and my home and auto insurance. How in the world can the Fed affect that? There are a lot of challenges right now in our economy that are going to be more inflationary. I don't know where the Fed came up with this 2% number, but I think that we're going to actually have to just figure out how do we balance our economy as opposed to try to get inflation down to some ethereal number that might sound good on paper, but is not necessarily real in the real economy. So, I mean, look at the Treasury market. Look at long-dated Treasuries. They're predicting the future more accurately than the stock market likely does. At least that's what history tells us. And so I look at trueflation.com, which has given us a lot of understanding for where things are headed and what's actually going on. My personal inflation this year is 6.2%. So the Fed comes out with numbers, the government comes out with numbers. I guess not when they're on lockdowns right now, but they come out with numbers and they do not reflect what's actually happening in the real world. So I think it's going up.
So if it is going up, how does the average American or the average American family position themselves in this economic environment? Because I also saw a massive uptick in my real estate taxes as well, higher than 20%, same as you. So, how do we best prepare knowing that some of the actions don't actually affect us directly?
Don't manage your balance sheet like the Fed. If your outgo exceeds your income, your upkeep is going to be your downfall. And so, you got to pare things back. You got to doge your financial situation because the world is more expensive. I think we've got a 28% increase of the cost of everything since 2020. And so, we need to be evaluating what we're doing and what we're not doing. I would say that, what we've been talking about here is allocating into some different places. So I personally think that metal miners are the lowest priced part of our market right now. I don't see how they could be going down, especially when we need these metals in order to modernize our world. And so, allocating into some of the right places is a really great opportunity. I'd also say take advantage of the Tax Cuts and Jobs Act 2.0, also known as the Big Beautiful Bill. There are parts of our economy, if you're getting a second job, that are going to give you a better tax advantaged experience. As an example, tips. And so no tax on tips could be an amazing thing if you're looking at a side hustle or something out there. But the average family's having to get smarter about what they're doing on a day-to-day basis, how they're shopping, what they're purchasing, and ultimately those are the things that are going to be moving the needle for your family at a time when everything seems to be moving, with some hand that we can't recognize.
David, we really appreciate you being with us today. Really insightful there. Thank you so much. That's David Stryzewski, the CEO of Sound Planning Group.